of the value trade within Europe.
Tom, it's Karen. Let me ask you something. If you think this rotation is really happening and tech is going to be sort of somewhat of an anchor on the market, do you think the market as a whole will rise?
Yeah, it's a dilemma. Tech and growth is 67% or 2/3 of the market cap, and it's really what builds careers for most institutional investors. So growth stocks are really what the professional money manager trades and understands. I think there's a chance that growth just does okay. Jeff DeGraff mentioned that because there's money flowing into the market. But for someone to have beat the market, outperform, it's really that 23% or 30% cyclical exposure that's going to do it. And of course, energy is an example. Energy's up 30% this year. I would say out of our entire client base, maybe 5% have dabbled in energy. Most have actually essentially zero weight in the energy sector. Most think it's just an annoying little group that's risen.
You know, Tom, it's interesting that consensus is now that the economy is going to come roaring back. And so, you know, I want to go to the contrarian thinking on this, and that would be so many states are you know, lifting their restrictions now. And while President Biden moved up the timeline on getting U.S. adults vaccinated to the end of May, there's still that critical time period, and the variants are still out there. Is that a possible sort of caveat to this whole forecast of yours?
Yeah, I mean, COVID's unpredictable. It's super dangerous. The variants are out there. So nobody can say COVID's been vanquished. But if you look at a state like Florida, that's been open, really relatively open for a while, their economy has actually been quite booming. And then if you look at states like North Dakota and South Dakota, where the prevalence of COVID plus the amount of vaccinations is over 60%, they've seen a 95% drop in cases. I mean, South Dakota now has like less than 100 per day. And so those economies, as they open, also have what appears to be a lot less risk. So I might say that the contrarian view would be people aren't bullish enough about the reopening, because this is really like a post-war reconstruction period with government stimulus. That is extremely boomy for real investment spending, which is the biggest multiplier to GDP.
Wow. Tom, always great to get your thoughts. Thank you.
Yeah, thanks.
Tom Lee of Fundstrat.